Good
All
day,
right.
good day, good day, everybody. Thank you for joining us on this fabulous Financial Friday. I'm here
Yes.
with the lovely Shateka Hauser. And basically,
Good
right now,
morning.
we're going to continue to educate, coach, counsel, and train, get people to understand and important. It's not how much money you make, it's what we do with the money. Here's Shateka.
All right. Well, good morning, everyone. I wanted to just speak to you about what it is that's on your mind today. Primarily, we've been talking quite a bit about tax-free retirement income and how to get those accounts structured properly so that you can win in wealth. And if you haven't, if you weren't able to watch any of the shows so far, I just want to do a quick recap and what we've been kind of discussing today. And we talked about the tax-free retirement account primarily. But before I get into that, let me introduce myself for those who's first time viewers, right? So I'm Shateka Husser, CEO of Husser Financial Solutions. We help people retire before they expire. So if that's you, we're the ones you hire. Our goal is to get you the lifetime tax-free retirement income so that you can win in wealth, right? As well as the next generation. The way these retirement accounts are structured is beyond your retirement. Okay. And it's literally into the next generation. So that's primarily what we're about in terms of our company. Now, for the purpose of what we've been discussing, we have been discussing how the qualifying plan versus the non qualifying plan is something that needs to be considered. All right. So a qualifying account is going to be a 401k, IRA, TSP, 43B, 457, 401k, any of those government, regulated accounts. And then a non-qualifying account is a lot of other accounts, like you can have savings, money market, insurance, the list goes on, but they're not the other types of accounts. The reason why the wealthy 1% and the informed go to what's called a tax-free retirement account is because they want to make sure that they don't lose their money in retirement. They want to make sure that they mitigate the risks, right? Because of the market volatility. So the market fluctuates. And sometimes there's not a rebound, depending on what type of accounts you have. You may not be able to recover in your lifetime. So their goal is to make sure that they don't even, accept those types of risks and that they make sure that their money, that they participate in the market when the market goes up and they don't participate in the market when the market goes down. So their money locks in place so that they're not going to lose that money, right? So that's the number one reason why most of them do not use a qualifying account. Now, somebody might be asking the question, well, I have a 401k and it's getting matched. I hear that all the time. When we look at the numbers, and numbers don't lie, in our systems, between the expenses that you're paying and the taxes that you're paying, you will do better. You do much better. Look, listen to this. Let's just say you're in a 24% tax bracket. The average person I've talked to is about that. No qualms if you're not. But let's say you're in a 24% tax bracket. We know that probably, if I was to ask you, do you feel like taxes are going to go up when you're in retirement? You'll say yes, about 5 to 10%. We don't know what it is, but we know it's going to go up. So let's just think about that. 24%. The average employer is matching you about 6%. You're going to pay 24% in taxes when they're only matching you with 6%. You do the math, but you're going to be paying more in taxes than they're matching you. And so not only that, but you're going to pay the least amount of taxes now than you would in the future. We know taxes are going up, no doubt about it. And if you have questions about that, you just want to research that more because I know we have those people out there. Listen to the book, The Power of Zero. I'm an Audible person. I like to listen to books. The Power of Zero will tell you everything you need to know about what I'm saying in terms of tax-free income. Okay. So you can do that. But we know that because those taxes are going up and because you already in, say, a 24% or whatever percent, if you don't know what percent you're in terms of tax bracket, I could tell you what that is based on what you make and rather you head a household and things of that nature. You can just have a consultation with me later. But the goal is to understand that. Look at what your employer is matching you versus what you're going to be paying in taxes. And you'll see that you will quickly run out of money. The average person is going to run out of money in their 70s when the person that is using some type of tax-free retirement account will never run out of money. Will never, I'll say that again, run out of money. And they don't have the risk that we talked about. So those are two benefits already that I'm talking about. We haven't even talked about medical and how when you have a tax-free retirement account, it's supplemented with, medical insurance, right? Basically. So if you become chronically, critically, or terminally ill, or if you have some type of critical injury, it's going to kick in for you because in retirement, 65% of bankruptcies happen because of medical, because people don't plan to become ill. They don't plan that, right? But life happens. So they're covered in the event that that happens, as long as, they get a tax-free retirement account. So that's number three in terms of benefits. The other one is, of course, you're making money while you're sleeping, right? So it's compounding for you, right? So that's exciting because, again, unless you figure a way to make money while you're sleeping, you will be working for money all the days of your life. So how are you doing that now? Like, most people don't know how to invest. They try and some fail, or to give it to someone else to do, and they may end up losing their money for them as well. But at the end of the day, again, no risk, right? So that's four reasons why. But the fifth reason is that most people don't have control of their money. They can't even access that money until they're 59 and a half or older, right? 65 in retirement. When you have full control of your money, when you have a tax-free retirement account, if you have an emergency like the wealthy do, they don't go to credit cards and loans and payday loans and pay these 60%, interest rates. They go to their tax-free retirement account and they pull out what they need and they put it back. Okay, so you have full control. So the tax-free retirement account is something that they want access to their money. They want those medical benefits. They want to be able to not lose money in the market. And if there's a lawsuit, the first thing that people are going to come for is your money, right? They're going to come for your qualifying account and they can get it. Okay, let's be clear. They can get it. But with a tax-free retirement account, they cannot access those funds at all. Absolutely not. So that's another reason. So there's so many reasons, right? But people want to be in a tax-free retirement account situation versus being in a qualifying account where, you again, I think I'm on number 7. I don't even know. I lost track. But you have a limitation in terms of how much money you can put in your retirement account with those qualifying accounts. When you have still a limitation, but it's a much higher limit than those, right? It's called a modified endowment contract. So it is a higher limit that you can put inside those. And that is exciting to know because most people are playing catch up. And there's all types of tax-free retirement account catch-up plans that'll help you so that you can be able to win and well even more, especially if you're someone that is in a six-figure earner. If you did it for the last 2 years on your W-2, can prove that you can actually do something that's called, it's $3 for every dollar that you put in. There's a partnership with you and the bank. The bank will lend you some money to catch you up in your retirement account to help grow your money over 15 years. And then you pay the bank back at the end of the 15 years, but your bank account, your retirement account is much larger than what it was. So that's another option for people that are looking to build wealth, especially if they, already have the 2 years. Because what they want to do is basically be able to get you someone that's an up and coming income earner, high net worth person. They want to be able to marry you with other high net people to be able to do an account, a special type of an account. That's why it's very stringent that you make that type of money. But no worries, we still have all types of tax-free retirement accounts that don't even require that. That's going to still be able to allow you to win in wealth and do all the things that I talked about before. So no matter what your wealth is or your income, your salary, you can still participate in a tax-free retirement account. The only thing is that we ask is that you be as healthy as you can, right? So that's part of it. It does come with a policy. So it does come with that as well. And so those are some of the things that you have to look at, right? When you say, what's the difference between a qualifying and a non-qualifying account? And I don't see, let me put it on comments. I'm sorry, because I wasn't even looking at comments. I apologize, but I'll be looking at that in just a second. So those are some of the things that I just wanted to mention to you briefly before we dive into it. And I brought up something called a policy, and I wanted to speak to that today as part of the topic, right? So term versus permanent, and should I get term or should I get permanent? A lot of people, say, why get permanent? Because I should get term because I can invest the rest. But like I said before, who knows how to invest better than an insurance carrier, right? Like most people don't know how to invest. And so the banks go to insurance companies to invest their money for them, right? If you look for stability in terms of growth, the insurance companies know how to do that best, and they always win, right? So one of the things that, most people that know term, they're only going to have a 2% payout on term. In other words, you have to die to benefit from a term policy. If you do not die, you do not benefit. There's no return on an investment. So what I often tell people is if you have to do a term product, because it works for who it works for, it doesn't work for everybody. But who it works for, you should make sure that you have two things happen for you if you have a term policy. One, you can get your money back after so many years. After 15, 20, 25 years of paying into a term, you want that what's called return on premium. ROP. So you want to make sure you have that attached to your term, right? So that you can get your money back if you don't die, because only 2% of you that have term are going to die. So the insurance carrier is always going to win in that arena, right? That's pure profit for them. And the other thing is that you want to be able to upgrade from where you are to a permanent policy so that you can be able to get all of the benefits of that a permanent policy will give you, right? So in other words, that's for your lifetime, right? And so you can structure those in different types of accounts and things of that nature. The difference between a term and a term insurance and a permanent insurance is simply that. Term is temporary, permanent is permanent. So you always have it for your generational wealth building. I like to say, I heard someone say, I should say it. His name is Travoy. He said that wealth is on sale with insurance. And couldn't agree more. There's no other place that you could put a least amount of money in and become a millionaire than in an insurance policy. So I would encourage you to definitely look at that closer. All right. So those are some of the things I wanted to talk about as it relates to that. But I want to make sure that I look at what comments are over here as well and see and pause here, Brian, and maybe you see some questions or you have some questions and see how I can answer those.
Okay, you know what? I've been getting different questions. Like a lot of
Let me
people
turn this
love,
up. I apologize. Give me 1 second. Okay.
a lot of people want to invest. And like, you've been coming at me like, yo, man, I've been listening to the program and a lot of great information. But it's like, I'm living check to check. I'm only got enough to pay my bills. Like, where I'm gonna get the extra money from? And even as I'm talking to him, and I'm just speaking from internal, I said, look, man, suppose you go and buying your cigarettes. How much does a pack of cigarette cost? See, I don't even know because I don't smoke. But then again, right now, bring your own lunch. Go home, make your lunch, opposed to spending $15 to $20 every day for lunch. That's right there can be what, 85 to $100 that you can utilize, what I'm saying, to invest. See, a lot of times people want to invest, but they don't know how to break it down, how to budget their money to make sure it working for them opposed to against them.
That's true. Budgeting is super important. And that's the first place people have to start. Because if you don't know what you have coming in, and you don't know how to allocate your resources, that's a problem. We should be looking at how we're segmented. Everybody has their own say on, where they're going to put their money. 10% goes to this, 30% goes to that. But there has to be some type of a plan in terms of how you want to structure the money that you have coming in.
You froze. You froze. Your camera froze. You there? Hey, but like I say, folks, what we have to do is right now be smart with money. Not just being smart with money. It's not how much money you make, it's what you do with the actual money that you do make. And that's what you got to keep in mind. Right now, we can make, what you can do is, guess what? When the most important thing you got to do is pay your what? Rent, mortgage. Okay. Take care right now was you got food, insurance. But then again, right now, what about the extra? It's all about the extra. And like, what do you do with that extra money? So I don't know what's going on. I look like Shateka froze up on me. Okay. Okay, Shateka is gone. Hey, but listen, folks. Once again, them cigarette and fast food's $100 a week if you work at it. Yeah, if you look at that. That's $100 a week. That's $400 a month that you can afford to put away into invest. So a lot of times people say right now we don't know or we don't have enough to invest. Yes, you do. You just got to make sacrifice. You got to ask yourself, do I want this or do I need this? If you don't, okay, here she back. Hold up.
Shatika.
You back.
Yeah, I'm sorry. I had to take a call real quick, but also had some challenges going on with noise in the office. So anyway, I'm back. Let me look at the comments here. All right. So I was saying that I don't know if where it got cut off at, but basically want to make sure that we have that people have some type of plan with their income and having it structured, in terms of where they're allocating their resources that they're receiving. to your point, they don't have a plan really, is what it sounds like, or they don't have enough money, right? So they got to figure a way how to squeeze, you know, this there's a terminology, squeeze blood out of a turnip, if you will. But at the end of the day, we want to just look at how to reallocate those resources so that we know where the money is going, first of all. So understanding that, I think, is the first challenge that most people have. They don't know where their money is going. They say they don't make enough money, but when you look at it, they probably do in most cases. When it comes to budgeting, that's where people struggle, because they don't have a budget. They don't have an idea or a roadmap or blueprint of their finances. So understanding what percent of that go to bills versus entertainment versus, just splurging, if you will, gifts. A lot of people like to bless people with different things, but then they leave themselves with a deficit. It's a lot of different things that people use their money on, but understanding what those funds are being used for, is, I think, the first challenge that most people have. So I would suggest that, to write down or do an audit of your income, like every month, like literally go back. If you don't have a bank, some people don't have bank accounts that, I've worked with. They just cash their checks, right? So you should have some type of way of, a bank account helps with that, helps you to be able to see what kind of money you have coming in versus going out, where, things of that nature. Rather, it's credit card. Some people use credit cards to do that. Why do that unless you're going to pay it back before the billing statement comes around? But you want to make sure that you absolutely have an idea. And I think that's the biggest challenge that most people have when it comes to finances. So if you don't feel like you have enough money, I feel like you got to first figure out, is that a true statement? That's what I'm saying. Is that a true statement? And then if you don't have enough money, then we got to figure out a way how you can supplement your income, right? So there's a lot of ways that you can supplement your income, out here, right? It's a lot of streams of income out here. There's no reason for anybody to be in lack right now, especially with everything that's going on online. It's just too many. We can do a quick consultation, and I can tell you all the different ways of how you can make money with whatever you have in terms of you. Like everything that we need to make money is on the inside of us. We just need to pull it out. We got to be creative. What problem can you solve? Number one is the first question I would ask anybody, because that's what businesses are. They just solve a problem. They figured out a way to solve somebody's problem or most people's problem in this specific area, and they started this business. So, what problem can you help solve? Would probably be my number one question, and then I can help you monetize that. The coaching me will help you monetize that, and I'm open to doing that. Right. So, I hope that answers your question, and if not, just ask it a different way.
And you know what? Like I tell you, it's amazing. I visit my father last week, and some of the things that we was thinking about and talking about, and I was so impressed as far as where I could say, and his wife was from a financial standpoint at this point in his life, because basically right now is his place is paid for. Right now is like he was thinking about, because of everything that was going on in the world, like with this, the situation. He want to have cash, like he don't want to have too much, but he want to have enough around him that he can touch at any given time. So even
Yes,
right now, with that little like conversation that we had, I was like amazed. I was impressed, because once again, like here it is, he's already at, what I'm saying, I'm 83, about to be 84, and he don't need anything. He don't want for anything. So basically, he kind of like still well situated and well off. And I was impressed by that, because once again, that's the difference. Like, you'd be surprised who's prepared and who's not prepared. And a lot of us is nowhere near prepared, because we don't even have a clue. We haven't even started the foundation. But
I
what you tell
agree.
us, it's not too late.
It's not. It's never too late. It's just a matter of getting into action. Money is energy. What kind of energy do you have? Because you can either repel it or you don't. What's your relationship with money, right? So your relationship with money says a lot about your bank account, right? And we talked about this before. And I often say, how you do one thing is how you do everything. And so if you're a good steward in your relationships, you're probably a good steward in your finances. You're probably a good steward on your job or in your business or whatever. But it's how we steward these resources that we have and understanding where they are. I want to answer a quick question though. Someone asked about qualifying, non-qualifying. I didn't mention that in the beginning. I'm not sure when they came in. But a non-qualifying account would be something that is not going to be a 401k, 43B, 43 for 57, IRA, Roth IRA, TSP is something that's not one of those types of accounts. Those are actually qualifying accounts. Anything that's not that doesn't start with a four or a TSP or IRA, or then that's going to be what's called a non-qualifying account, basically. So I hope that helped answer your question. I know I covered it briefly before. Let's see. So go ahead and Batman. Okay, I just want to see if there's other questions out here. All right. I don't see any other questions. So yeah, that's pretty much what it is. But we got to figure out a way to be able to structure our accounts properly. Now, I was starting to talk about insurance, and you asked that question, and I talked a little bit about the term. So getting back on that really quickly, so I can finish that up. The term is just what I mentioned before. The permanent is going to be able to, like I said, give you that policy so that you can be able to have all types of benefits, to include, certain types of care assistance, right? So you ever had someone that has dementia or anything, and they have to go in a facility and they can't afford those. Sometimes if they have the right policy type, they can actually accelerate, and be able to access for long-term care from that policy. So certain types of policies are going to be able to do just that, so that you don't have to go into your own finances, So like, to have that on your parents would be important if you can't afford to be able to help them with their long-term care needs. If you are someone that's still working and your parents are elderly, different types of insurance is going to definitely help you with that. Now, that's primarily something that's that's kind of overlooked, and things of that nature. So, Brian, what other questions did you have? So I just wanted to finish that off real quick.
No, like I said right now, is to me, we're going to keep doing this. And like I told you right now, giving people the general idea, letting them know like it's money out
Yeah.
there. They just got to learn how to be smart with their money as far
Yeah.
as like budget, opposed to going
Yep.
out there for the fast food, start bringing lunch, opposed to with the bad habit with the cigarette and the beer and the alcohol, the stuff that they really don't need, that more is like they use and destroy their body. They got to take that money and use it to invest and invest wisely.
I actually, that opens up another whole comment that I wanted to bring up, because House of Financial Solutions is all about educating individuals. I mean, if you go to generationalwealthsymposium.com, it's an event that I did back in 2019, and I've been doing it every year since. It's really to educate the community on financial literacy and financial wellness, how to do real estate investing, how to become a business owner, taxes, the list goes on. But if you go to generationalwealthsymposium.com, that's going to show you that. Now, that's just to tell you that, I have been trying to help people learn this, because I understand that it doesn't matter how much money you make. People can make six figures and they still be broke because they just don't understand financial literacy. And so the goal is to educate people. And this is a huge challenge, especially in the communities that I've been a part of. Right. And so I want to, give this offer for anyone that's looking to make additional income. If you're looking for another stream of income, I'm definitely looking for partners. Yeah, right. So I'm looking for partners that can help me, number one, educate people on how to win in wealth, right? So definitely, reach out to me. The numbers on the screen going across. But if you feel like that's something you want to do, and as a passion of yours, I definitely want to partner with you. So I want you to reach out to me, because I'm only one person, but there's a lot of people out here doing it, but it needs to be a whole lot more. And especially in our communities primarily, and especially in the youth, for the youth that are coming up, like the 20-year, the millennials, the Generation Zs and Ys. We need more of them in this industry to help and empower and educate people on finances, so that everyone can win in wealth. Because the Bible tells us that the poor will always be among us, but we ought to. I feel like we all have some type of fiduciary responsibility to help in some way. So even if you don't want to get into the industry, maybe somebody that does, would love to partner with them. But also, we do referral fees as well. So if someone you refer, that's another way that you can get a stream of income. As long as we work together, and there's something happening, you can actually receive some type of income that way as well. So we do like silent partners in this field as well. So definitely want you to reach out if that's something that you're interested in doing. If you have a heart to help people, I do the Winning in Wealth room in Clubhouse as well every morning. And that's more of a spiritual room in the mornings from 6 o'clock to 7. But we also do it throughout the weeks and the evenings. And WELL stands for Wise Entrepreneurs and Leaders Transforming History. And our goal is to help people transform history in terms of the finances in our community. I've been on the radio as well with Baltimore, and I just came off actually for several months trying to empower the community. But because the workload became so great, I had to take a break, from it. But definitely any way that we can amplify our voices around how to help people win in wealth is what we need to do, because we want to make sure that there's no lack. There shouldn't be any lack among us, because there's just too many ways to, number one, make money. But if we can just properly steward it, understanding where to put those finances and what type of buckets to put the funds in, right? So these tax-free retirement accounts, ideally, then we're going to win. So that's primarily what I wanted to talk about with that. That people are losing in these qualifying accounts because of the expenses. You pay 30 to 50% more in expenses in those qualifying accounts. And there was a lawsuit out, with Fidelity that I heard because they were not disclosing all the fees to these people about these different types of accounts. So it's called underwater fees versus above water fees. And so the above water fees have to be disclosed, but the below water fees aren't always disclosed. They don't disclose at all. So want to make sure that people understand that, and they have their money inside an account that's not going to be eaten up by fees or be eaten up by taxes. Most people overlook taxes, even though that's one of the greatest debts out there.
You know what? Hey, I want to thank everybody for taking the time out to join us today. We got to. I'm looking at one thing I want you to answer because I got to get out of here. It's by Mr. Lee River One. If you live a tax-free retirement, do you pay taxes at the end of the year?
Oh no, you don't pay taxes. Absolutely not. Not when you have tax-free retirement income. You absolutely will not be paying any taxes. Good question.
Hey,
Um, yeah, you can, Mr. Lee River One. You sure can. Yeah, so I apologize. And I actually have webinars going on Tuesday evenings in August. I have a community that's growing, and basically when you sign up in that community, you get access to the webinars for free. So just go to Shateka.com and you'll see how to join, and basically once you get into the webinar, I'll be able to deep dive into this, because I'm really just doing a high level overview. But that webinar probably takes about 40 minutes to go through. But I have several webinars, to be honest. There's one in particular that I do on Tuesday nights to educate on that particular topic, specifically tax-free retirement. So Brian, I know you're rushing. You got to go, and
Okay.
thank you for your patience.
No problem. Everybody, thank you for joining us. Like I said, right now, we'll be back next Friday. Or you know what? Guess what? We probably set something up that, whereas, guess what? We got unlimited time. See, that's the difference. When you're trying to budget your time, and like she said, she's by herself, I'm by myself, and you're trying to do everything at once, you only can do but so much together. You know how that is. Hey, but listen, everybody, have a fabulous Friday. Hey, Queen, thank you. Hey,
Thank
tune in next
you.
week. Same time, same channel. Peace, love, and
Bless you all.
prosperity. God bless.